What if the biggest driver of the entire market isn't company profits or even economic growth, but just a single decision made by the Federal Reserve? Well, our source today argues the Fed is about to flip a $1 trillion switch that could reshape, well, everything. So we're going to break down exactly what the switch is and what it might mean for everyone's portfolio, from stocks all the way to crypto. That's the bold claim right at the heart of what we're digging into today. The source is convinced that the end of a massive Fed experiment is about to kick off a historic rally. That's a pretty powerful statement, so let's jump in and look at the evidence. Okay, so to understand what's coming, you have to look at what just happened. Since the middle of 2022, the Fed has pulled $2 trillion of liquidity. That's just cash, money available for investment, out of the financial system. That is a massive headwind for any market to try and fight against. Which brings us to the big question, right? If pulling $2 trillion out of the system acts like a kind of gravity on asset prices, well, what happens when you suddenly just turn that gravity off? That's the exact pivot point our source is watching so closely. To really get a handle on this, we need to understand this fundamental tug-of-war in modern economics. It's the battle between quantitative easing, or QE, and its total opposite, quantitative tightening, or QT. Think of it this way. QT is basically the Fed acting like a giant financial vacuum cleaner. They sell off assets from their massive portfolio, and the cash they get back doesn't get put back in. It just, poof, vanishes from the system. It actually shrinks the total amount of money that's out there. Yeah, this slide lays it out perfectly. QE is the accelerator. The Fed is pushing money into the economy to speed things up. And QT is the brake. The Fed pulls money out to slow things down. And for the last couple of years, the Fed has had its foot pressed firmly on that brake. Our source has a great way to visualize this whole thing. Imagine the market is a giant swimming pool that you're trying to fill up. Well, during QT, the Fed is at the other end, draining $95 billion out of it every single month. So no matter how much water or money you try to pour in, it's just incredibly difficult to get that water level to rise. So, these policies, QE and QT, they're actually really new. They're experimental. To understand why they even exist, we have to rewind the clock all the way back to the 2008 financial crisis. This timeline really shows the wild ride we've been on. It all kicks off in 2008 when the Fed basically invents QE on the spot to stop a total economic collapse. And then, right after that, Bitcoin is born, pretty much as a direct protest. Then you see this crazy back and forth, a little attempted QT, then a massive flood of QE during the pandemic, and now the most aggressive QT we've ever seen to clean up all the inflation that followed. But wait, where does all this QE money even come from? Well, the source points out something pretty fascinating. It's not printed in some factory. It's created digitally. The Fed literally creates new bank reserves with a keystroke and then uses that brand new money to buy up assets and flood the economy with cash. And it is absolutely no coincidence, as our source points out, that Bitcoin was born in this exact environment. Its creator famously embedded a newspaper headline about bank bailouts right into the very first block of Bitcoin, a crystal clear protest against the kinds of policies that QE represented. So how does all this connect to asset prices? Well, the core of the source's argument is this. There's a direct, almost one-to-one relationship between these liquidity cycles and how assets like crypto perform. It's simple. When the Fed prints, prices tend to rise. And when they tighten, prices tend to fall. All right, let's look at the first half of this equation, the cause. Back in March 2020, as markets were absolutely crashing, the Fed turned on the money hose and unleashed the biggest QE program in history. And here's the effect. In the months that followed all that QE, Bitcoin went on an unbelievable run, rallying nearly 15 times from its lows. The source points to this as Exhibit A, that all that excess liquidity has to find a home, and it often flows right into riskier assets. Now let's look at the other side of the coin. Fast forward to June 2022. Inflation is raging, so the Fed slams on the brakes with QT, pulling all that liquidity back out. This is our second cause. And sure enough, here's the effect. As the Fed started draining that liquidity, Bitcoin's price got chopped in half in just a few months. The source argues the pattern couldn't be clearer. Liquidity in, prices up. Liquidity out, prices down. Okay, so if we take this historical cause and effect relationship as our guide, the source builds a pretty compelling forecast for what's about to happen as the Fed gets ready to shift its policy yet again. So what's the big event? The Fed is signaling that it's ending QT. We're talking about nearly $100 billion a month. That's over $1 trillion a year that will suddenly stop being pulled out of the market. The foot is finally coming off the brake.
And it's not just about QT ending. The source points to what looks like a perfect storm of factors, all adding more fuel to the fire. You've got stimulus coming from other huge economies like China and Japan. You've got the prospect of US rate cuts on the horizon, and it's easier to get into crypto than ever before thanks to things like ETFs.
So the source actually predicts a specific sequence of events. First, the Fed ends QT. Then there's this historical 90-day lag as the market kind of digests the news. After that comes the catch-up rally, where assets like Bitcoin reprice for this new liquidity reality. And that move could be seriously amplified by all those other stimulus factors we just talked about. So we'll just leave you with this thought. If this theory is right, if the biggest force moving the markets isn't company earnings or some big innovation, but simply which way the central bank's money hose is pointed, what does that mean for how we're all supposed to invest? That's really the fundamental question at the heart of this whole $1 trillion switch.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.